So rising inflation, rising interest rates, rising fuel prices and many other prices going up as well. Plenty then to put to our panel of experts. Let me introduce them to you this evening. We've got Anna Stevenson, a senior welfare benefits specialist. We hope to be joined very soon by Vicky Pryce, the Chief Economic Advisor to the Centre of Economics and Business Research. And also there, Baroness Altmann, former Pensions Minister, personal finance expert and Conservative peer. Very good to see you all. Two will soon become three, but let's crack on with the questions. And our first one comes from Paul. This is the question that Paul is putting. How does increasing interest rates, as has happened today, of course, help with alleviating the cost of living crisis when fuel and food increases are out of control? Kick us off, Anna. I mean, how is that meant to work? It doesn't really help anyone who's got any kind of borrowings.
I'm guessing this is one that was supposed to go to one of the other guests, but I'll have a go, but this isn't quite my area of expertise. My understanding is that the idea is that it should take some of the heat out of the market and slow down inflation. But I do hope that someone better informed than me will be able to come in on this soon. Well,
no, you're spot on and succinct, but Ros Altmann, just expand on that for us. I mean, it does seem we know what the Bank of England's got to do. It's got to try and get inflation down, but this actually doesn't help anyone with dealing with the cost of living crisis.
No, and that's the very difficult balancing act that policymakers are currently faced with. You know, a lot of the inflation is caused not by domestic factors, but by outside forces. So to the extent that, you know, the war in Ukraine and higher prices due to global supply chain problems are occurring, changing interest rates isn't going to make much difference to that. But there is also, at the same time, a little bit of what the bank thinks might be overheating in the domestic economy. You know, unemployment is at a record low. There are plenty of jobs and, in fact, job vacancies all over the place. And a tiny increase in interest rates that we've seen today is really more of a signal to try and dampen expectations that growth is going to be really strong and try and control the overheating that's been going on in the housing market, maybe stop people borrowing quite so much, encourage them to repay their debts rather than take out new debts, because interest rates have been exceptionally low for an incredibly long time.
It's interesting what you say there about it's a signal rather than an attempt to cause any real economic pain to consumers. David, I just want to stay with you on that, Ros, about inflation. And David's got a question, which I suppose is about how much of it's domestically generated. And as you touched on there, how much of it is due to, well, external factors really beyond the UK's control. He asked, with the main causes being global issues, how will an increase in the UK interest rate make any difference? And that is the point. We know the answer to that a little bit, but so many factors aren't controllable within these shores.
Yeah, and of course, there is also the impact that we haven't properly seen yet of the falling pound. The weaker the pound is, the more imported goods will cost in domestic sterling terms. So the Bank of England needs to raise interest rates as a signal to the markets that it is willing to try to control inflation. But if inflation is due to temporary factors, you know, the unwinding of the bottlenecks due to the pandemic, and hopefully the war in Ukraine will not continue and there will be less pressure on energy prices and input prices, that itself might help to dampen down price pressures. An interest rate increase, in any case, tends not to have an immediate effect on the economy. The bank is typically looking, you know, a year ahead at least, and giving this signal that the era of ultra low interest rates is probably pretty much coming to an end. The bank clearly doesn't want interest rates to rise sharply, because that could tip lots of people into real problems with the extremely high levels of debt we've seen. And therefore, there is this delicate balancing act. A lot of the recent inflation is due to the after effects of the pandemic and the recent Ukraine war situation.
And just in terms of that signalling, is the Bank of England taking a radically different approach, or got different data, or are there different circumstances in the UK compared to the United States, where we saw the day before the Federal Reserve go for a 0.75% increase, and it's only 0.25% here?
Well, the big difference in the US, I think, is that the fiscal policy itself, the government's overall policy stance over there, has been extraordinarily accommodative. You've just had, as a result of the pandemic, just a few months ago, everybody was sent a huge check from the government to try to maintain spending. Now, that has boosted the economy, while in the UK, you've actually had the Chancellor who's just increased some taxes, especially national insurance, for example. So although we've had a cut in fuel duty and some relief for energy bills overall, there has actually been a bit of a tightening of fiscal policy in the latest round. And the government has so far signalled that although it wants to cut taxes in the longer term, in medium term, maybe 2024, it could be that before that there will be some more tax rises in the pipeline, like an increase in corporate taxes, which again offset some of the need for a much sharper increase in interest rates.
Well, that's the big picture stuff. Let's go down to some people's personal circumstances. This one from Jay says, people on minimum wages are not getting any help. How are we expected to survive? Work doesn't pay. Anna, do you go along with Jay's point?
I mean, we have seen a long time when real wages have fallen, and at the moment they really, really aren't keeping up with inflation. So I can absolutely see why he's feeling anxious. There is some support available for people working on minimum wage. The first thing I should say is that a lot of people assume that they can't get benefits if they're working, and that's just wrong. Around half of people on universal credit are in work, and there's been some changes recently that have increased the generosity of universal credit for working people. So if you haven't done a check in the past few months to see if you can get universal credit and you're feeling the squeeze, it is really, really worth checking. It's free, it's confidential, it takes about 10 minutes. You can go to the Turn to Us website, and it is very, very simple to check. There's some other things that people on minimum wage will be seeing. So from July, the threshold for when you start paying national insurance contributions goes up, and mostly it's going to be people sort of earning over £9,000 a year, but not earning very large amounts, who really benefit from that. So he'll probably see a little bit more in his take-home packet from July. There's also going to be the £400 payment, which will go out to almost all households in the UK. That will help on energy bills through this winter. So there is some help coming, but at the same time, I really can see how people are finding that their wages just aren't keeping up with the rate at which all prices are increasing.
Well, Jasmine has a related question to that. I'll stay with you, Anna. She's more or less asking, perhaps as I would have done, for you to expand on this people who are on low incomes in work claiming their benefits. So the specific question is this: will those on a low income that just missed the mark for qualifying for benefits receive support? Income is still very low, and many are left with barely enough to survive at the end of the month. And that is the point, Anna, isn't it? There's a cut-off point, and so you may only be a few pounds a month over the limit for benefits, but life is still really tough at the moment.
Absolutely, yeah. You know, this group of people probably did get the £150 council tax rebate, but that may be a distant memory by now. As fuel costs increase so fast, I can really, really see how people are struggling. Like I said, there will be this £400 on energy bills through the winter, and there will be the changes to national insurance that come in July. So there's going to be a little bit of extra help, but it probably is going to be a pretty hard winter for a lot of people, and the government is fairly plainly saying we can't help everyone and we do expect this to be a hard time for a lot of people.
Well, they specifically said that today. We heard that from Michael Gove. And just on that, Jasmine, you mentioned that point about benefits. Do you think some people may think they're not eligible? But as the government itself admits, a lot of benefits go unclaimed. It's worth checking everything, isn't it?
It absolutely is. A lot of benefits go unclaimed. People very often assume that they can't get benefits without actually checking. And like I say, it's so quick, it's so easy to check. Turn to us website, turntous.org.uk, plug your details into our benefit calculator and just see if there is help you could be getting. You might well be surprised. Yeah,
you never know. A mix then between the relationship between personal income and the overall economy from Declan asks, won't taking money out of people's pockets when they're already struggling mean less money enters the economy, which will lower GDP and then create a recession? I suppose, Baroness Altmann, you call that an unvirtuous circle.
Well, this is the dilemma that we're currently in. If you want to curb inflation, the typical remedy for that is to stop growth. That would normally lead to a major slowdown, but usually you have high inflation when growth is going gangbusters. And of course, at the moment, growth isn't. And that's where, there is this fine line between trying to send a signal to the markets not to expect inflation to last. The Bank of England keeps saying, actually, we don't expect this to be permanent. We expect this to be, maybe dying down by next year. And we need to ride over that, because if we jack up interest rates in the way that we normally would for inflation of 10% or so, which is at least is expected, then the economy would tip over into recession. We'd get people losing their jobs, companies going bust, which is exactly what the low interest rate policy was meant to avoid in the first place. So you do need to look at whether or not this is permanent. And of course, if we see a position where the war subsides, the global supply chain issues subside, energy prices start to come down again, then at least you'll see some unwinding of this, and we'll get back to be able to judge what really is happening underneath, rather than with all the exceptional factors that have been going on. But the government is trying to help those who are generally considered to be most vulnerable, those on the means-tested benefits, the lowest income, the £650 cost of living payment, first of which will come in July, and then the second one later this year. We'll just be passing legislation to make those payments at the moment. So if you're on universal credit or whatever,
I'm just butting in here because we're nearly out of time for this section, both of you. And the next couple of questions cover some of the points you've been making there, Baroness Altmann. Hannah asks, why are the government doing nothing to support the current crisis? And Anthony asks, could we see a further increase in inflation? If I can put those backwards, just stay with you, Ros Altmann, on that issue of, it might pass. That's the point, it might. We heard I remember in October, Joe Biden saying the rise in inflation was transitory. Boris Johnson more or less echoed that. Here we are 9 months later. And, the picture further out is still looking fairly bad. The answer is, why can't policymakers and politicians be honest? They actually just don't know.
Well, that's certainly true. But nobody would have predicted the pandemic, and nobody would have predicted the war in Ukraine. Everybody said that Russia wouldn't invade, and suddenly here we are dealing with the consequences to some degree. It is that there is more than a normal degree of uncertainty. There's always uncertainty. The way statistics works, typically if prices have shot up very fast this year, then the comparison next year with this year, even if prices stay roughly the same, will be a very sharp reduction in the rate of inflation that's reported. But what we don't know, and what is unlikely, I think, is that there will be a massive boost to growth coming again. We've seen lots of people getting money from governments, both in the States, as I said, and over here now. So there'll be support, but it is a really tough time. And I feel for those who are just above the means testing level, who are really struggling with the cost of living, and pensioners, elderly people who really just
fixed
can't
incomes,
afford to even pay their bills.
Getting their pensions eroded by inflation. Just that question from Anna, why are the government doing nothing to support the current crisis? Would you give them that they're not actually doing nothing, they just can't do enough?
I mean, it is an enormous crisis, and at Turn to Us, we have pushed really hard to see government support, and we're really actually quite glad to see the way they've targeted the very most vulnerable people who have no space in their budget to drop other things apart from fuel and food. So the government is doing things. They are doing quite a lot of different things. But the fact is that the scale of the crisis is enormous, and the government has chosen to focus that intervention only on the people who are the very most vulnerable.
OK, listen, I'm glad to say thank you both very much indeed for holding the fort on some of the economist questions, because we're joined by our economist. There she is in the middle now, Vicky Pryce. Good to see you, Chief Economist, Chief Economic Advisor to the Centre for Economic and Business Research. Vicky, got a question for you from Andy. During the last big recession, interest rates were dropped to stimulate the economy. With another recession looming, what takes precedence? And this is the chicken and egg question: raising or lowering interest rates? Rock and a hard place.
Absolutely, and that's exactly what the central banks have also found right now. They felt they had to raise interest rates, and in some cases, like in the US, very substantially, and it's happening here too, although not quite as fast as in the US, because of the very high inflation that we are experiencing right now. It is a big issue because clearly, this is an external problem that we've all had to face, and I'm sure you discussed that as well. So energy prices, food prices going up, very little to do with what the economies in the West have been up to, very little to do with the expansion in money supply and the very low interest rates we saw during the COVID crisis. But it's a lot to do, of course, with the war in Ukraine, supply chain issues that we met immediately the moment that we opened up. Because basically everything had been dislocated. There had been so many cancellations of orders from manufacturers. So people were not able to then respond very quickly. Certainly, if you look across the world, you had problems with China responding, semiconductors not really available for cars, etc., etc. In addition, of course, we've had the war in Ukraine, which had made things considerably worse. Now, unfortunately for the central banks, they are not really quite capable of doing this proper balancing act right now of caring about inflation, but also about growth. So if you were looking at where we are in terms of the serious slowdown in the economy, you would think the opposite. You would think that interest rates should really be coming down rather than going up. And at the same time, of course, what we've got is a monetary tightening and a fiscal tightening. Because a lot of the support that was given to the economy has been removed. In the UK in particular, we've been putting taxes up. So right now, the balance between monetary policy and fiscal policy isn't right. So my answer would be that if we were able to relax fiscal policy right now, you could still perhaps raise interest rates up to a point. They're still very negative in real terms. So for everybody who's worried about being able to meet their mortgage payments, of course, they're going up in nominal terms. But in real terms, if inflation is up at 8, 9, 10%, and interest rates are at just 1.25%, where we're talking about a very negative real interest rate environment, which therefore shouldn't by itself economy down.
And pretty low by historical standards, as you've been saying. So Richard asks this one, and so many other people wondering as well. We saw interest rates raised to double figures in the late 1970s, and more recently than that, of course, in the 1990s as well, to combat high inflation. What is the likelihood of that happening this time round, that we get into really high interest rates, 15, 20%?
I would say it's very unlikely. One of the reasons why interest rates were raised a lot in the UK at that period was also huge concerns about the exchange rate, of course, and also at various stages, attempts made to keep the exchange rate high when we were trying to sort of attempting anyway and thinking about possibly join a currency union with the rest of Europe. Now, we didn't do that. We decided to abandon that idea and lowered interest rates very significantly. The pound, of course, fell. So we had periods like that in the past. The forecast now for interest rates is that you might get 2-3% in the US, maybe 3.5%. We might get a doubling from where we are here in the UK, but certainly nothing like what we've seen before, not in double figures. And the expectation is that those inflationary pressures we've got now are going to go away over the next year, really. And by the end of 2023, we may be almost back close to target if prices don't continue to rise anything like as fast as they've done so far. So if they plateau, if for example, oil prices don't rise much further than where they are now, then you see a very substantial drop in inflation happening very quickly. In that environment, double-digit interest rates are just not justified at all.
OK, well, that's the outlook. Thank you very much indeed for taking us through that, Vicky Pryce. I want to put this one to you, Anna, from Mary Ann, and we touched on this, but just expand. We only hear about how hard it is for people who are working. What about pensioners who can't borrow or get loans? And of course, I'll add in, are on a fixed income which has been eroded by inflation.
Yeah, pensioners are going to be hit really hard by rising energy bills. That is partly to do with the fact that their incomes are fixed and it's harder for them to work. It's also to do with the fact that it can be harder for them to just choose to do without heating, that can pose a much higher health risk for older people. The first thing I'd really like to say is that pension credit, which is the benefit for older people, is desperately underclaimed. Very large numbers of people could be getting pension credit and aren't. The government has been doing a bit of work this week, actually, to try to increase take-up rates. And if you're pension age yourself, if you know someone who's pension age, it is really, really worthwhile checking if you can get that pension credit. Not only does it increase your income, it also gives you access to a whole load of extra help that you can get once you're in receipt of pension credit and identified as one of these low-income pensioners who needs extra support. So that extra help includes things like £650. That's extra £650 for people on the lowest incomes. Pension credit is one of the qualifying benefits for that. Pensioners will also be getting an extra £300 on top of their normal winter fuel payment. They'll also get the same £400 off their energy bills that everyone gets. So they're getting support, they're getting extra support, and they're getting extra targeted support to try to help people. And in addition to that, the government has committed that in April it will increase pension age benefits in line with inflation. So that's a hugely expensive commitment that the government has made. So this is a sort of lag while state pensions, fail to keep up with inflation.
That's practical and useful advice there, Anna. Check your pension credits. We're going to end this section before we take a short break with a question, I suppose, that goes from the personal and illustrates a much larger problem. Leo says, I'm a 15-year-old student from Liverpool who has a mother suffering from the cost of living crisis. How is it beneficial to tax her instead of companies who could pay more than quadruple the minor taxes they currently pay? I mean, Ros Altmann, we know that corporation tax is due to go up. There's been a windfall tax on some of the energy companies, but it does seem unfair, doesn't it, that individuals are being taxed more highly than some of the multinational corporations operating in the UK.
Yeah, and I think there was a particular problem, and I wish the Chancellor hadn't done it. A lot of us were trying to persuade him not to, that the national insurance rate was increased just in the last few weeks, which cuts her take-home pay. But his mum will then benefit from the increase in thresholds that is coming in July. So you've had a fall in take-home pay right now, which is a terrible time for that to happen. The Chancellor sort of recognised that and is going to be improving the situation from July. It's a shame that we had to give with one hand and take with one hand, but we're giving back with the other. And it is absolutely, I think, right to suggest that big companies, particularly those that have done very well out of the pandemic itself and perhaps out of the increase in energy prices, should be taxed more highly, whether that's a windfall tax or just some other way of raising the revenue. The same with some of the online businesses that have done very well. Those are areas which I hope the government is looking at to increase some of the taxation burden on them rather than on ordinary people.
OK, listen, it's been really good talking to you all, and we've got much more to come from you in the second half. We're going to take a short break now. You rest those grey cells because we've got plenty more questions coming up to tax. Excuse the pun. You are with from our audience. You are watching Sky News, a special question and answer programme. Coming up after the break, we're going to be asking what support is there for those who work but are still struggling. Stay with us for the answers. Welcome back. We're answering, as you probably know, your questions about the cost of living crisis with our expert panel. Let me reintroduce you to them. We've got Anna Stevenson, a senior welfare benefits specialist. Vicky Pryce is the chief economic advisor with the Centre for Economics and Business Research, and Baroness Altmann, former pensions minister, personal finance expert and Conservative peer. And so, as I say, the questions have been flooding in all day to us, illustrating, I suppose, the scale of this crisis. Jane asks this: what about the people who work full-time, who are unable to claim any financial help and are still struggling? They can't just help those on benefits. Workers are becoming the forgotten people of this country. Baroness Altmann, you know, we've kind of touched on this when it comes to benefits, but people in work who are above the benefits threshold, there is the issue which you were just mentioning, tax cuts, when in actual fact, for those, apart from the very lowest paid, taxes are going up.
Well, that's right. There's this temporary period where national insurance has just gone up, which is very unhelpful. But it's about to go down again in July. So the national
but not
living
for
wage
everyone.
has been increased. No, for those who are in work, and the thresholds have been increased significantly. So unless you're on a very much higher income, you know, those who are just above the means testing level will benefit from this. And the national living wage has increased by 6.6%, which of course is behind inflation, but it's still a significant increase of about £1,000 a year if you're working full time. And there is at least £400 for every household with their energy bills. So it's a problem because the government hasn't got an unlimited magic money tree either. And I know that people are struggling. The best way for this to calm down is for the global pressures on raw material costs to start coming down. But I do hope the government will do more to recognise that, you know, people in work also need help. And people just above the minimum thresholds could end up a lot worse off because they're not getting the extra benefits that means testing entitles you to as well. OK, another question about that, about someone in work. This is Matt. I don't know if he's got a family as well, but he says he earns a reasonable above average salary of £36,000. I'm struggling to cope with the cost of living. What help is there for someone in my bracket? I'm currently using credit cards to get by, but it isn't sustainable. That is for sure, Matt. Any help with that, Anna? It's not very wise to use credit cards with their huge rates of interest, but if you've got no alternative, that's where you're going to end up.
Yeah, I'm definitely pleased to see that he recognises that that's unsustainable, and I would encourage him to get advice on how he can manage his money more effectively as soon as possible. The Money Helper website has a really great tool that can help you to find free, confidential, responsible debt advice. So that's where I'd suggest he starts, because, yeah, it really isn't going to be sustainable to fund his day-to-day living on credit cards. Again, if he hasn't checked, he really should check if he can get benefits, especially with the changes that were brought in autumn-winter last year. The amount of help that's available to working families is really quite surprisingly high. So if he hasn't done a check in a while, it's a very good idea to check if he could be getting any benefits.
OK, well, we've got a lot of questions, as we would expect, about driving, the cost of fuel. I'm going to roll a couple together. Jim says, what are the government doing about the rising cost of fuel? And Dave adds to that, saying the government's tax take has increased hugely through rising fuel costs. Why aren't they reducing fuel tax to bring prices back down? And I want to put this to you, Vicky Pryce, because clearly the Exchequer take has increased because of the rising cost of fuel. Does it have enough in its coffers to at least cut VAT or fuel duty as well on fuel?
It does. I mean, of course, it's going to have to borrow a little bit more, but they borrowed so much. The government has borrowed so much during COVID, and that didn't provide any huge difficulties for being able to go out to the markets and do so. So there is room still. But the interesting thing about fuel tax more generally is that the general concern that people have about reducing fuel duty is that we're going completely against anything that we have been talking about on climate change until now. And it will be very, very difficult then to put it back up again. We hadn't, in fact, raised fuel duty as we should have done for a good sort of 12 years. And if we had done so in line with the previous increases, we would have probably ended up with hugely more headroom for the government now to be able to redistribute it. So for the moment, it isn't huge. But of course, yes, extra VAT has been helping. Now, the real question is about the future. People are already driving less. So less will be collected in the future. We're seeing the slowdown in the economy. We're seeing what's going on with retail sales and so on. Some of what the government was supposed to be collecting in the future may just not be there. And there's also talk, of course, of reversing the national insurance contribution increase that it has just been mentioned, which, if it were to happen, takes away an awful lot more again from the government coffers. So we have to be careful, and it's worth just adding that what the International Monetary Fund, for example, the international institution which is looking after the sort of the world economy and making sure that money is transferred to the needy countries that are right now, of course, increasing in number, is saying we shouldn't actually subsidize fuel or energy. What we should really be doing is just redirecting fiscal policy towards those that need it most. So benefit increases, for example, giving these allocations that the government is now doing to everyone, not just perhaps to those who are the bottom end, but more generally, because it's hitting loads and loads of people in the middle income distribution as well. So it is a difficult situation for anyone, but there is no doubt that if the government was intent on redistributing more even by reducing fuel duty even further, then there is room for manoeuvres.
But what about Vicky Pryce? I mean, that's the government. Pete highlights this with our next question about forecourts always quick to pass on increased fuel costs, don't we know it, but painfully slow to reflect decreases. Will we ever see a litre of diesel return to less than £1.40? And this is the fact. I know President Biden in the United States has written to all the so-called big oil leaders saying, well, look, you're making these massive profits. You're very slow to bring down the cost of fuel when the wholesale price drops. Is this something that can be sorted out, that these big corporations can be forced to pass on the cuts more quickly?
Well, as we know, there's been, well, if you like, hasn't been a study yet, but there's been a commissioning of a review by the competition authorities in the UK of what's happening in the forecourts, and are we perhaps being charged too much? And are they indeed keeping the profits rather than passing some of even the fuel cut that was supposed to happen, the fuel duty cut that was supposed to happen, onto consumers? There is some evidence that not everyone's been doing it. There is some evidence that quite a lot of forecourts have, in fact, been passing it all. But it is absolutely true that when prices go up, then we see petrol prices go up very significantly as well, at the pumps. And when they come down, it takes a little bit longer for this to happen. So there is no doubt, therefore, that something happens with the margins of those companies. And indeed, there is a question mark as to whether one should look again at taxing them a little bit more than we do at present, even though obviously they're still taxed quite significantly given the current system as it exists at present.
All right. You mentioned, Vicky Pryce, there, the fact that people are already we're seeing people being unable to drive. And of course, it's economically and socially absolutely necessary for so many people. And this question from Paul illustrates that, Ros Altmann, pretty soon people won't be able to drive to work. What is the government's plan to tackle this? And I was reading, I mean, there's so many examples of this. I was reading just the other day, hearing about, a social worker, many of whom pay home visits. They're so important, because of cuts and pressures. Even before this, they've only got 15 minutes or so with the people they're going to visit. Now, when they fill up their cars, they're putting over £100 worth in a day to get round. It's unsustainable, isn't it? The government has to do something.
Well, it is unsustainable, and somebody needs to help at some point if this continues, because social care workers, for example, will be unable to afford to work, and they will stop working, and we'll have an essential service that doesn't have people to fulfill it with already shortages. But that might mean that the employers of those people will have to start covering the costs of travel, and that I think one of the government's plans is to improve public transport, to encourage people to use more trains and bus services, and also to
that won't work next week.
To share cars or to move to electric vehicles, because that again cuts the cost of running. The cost of owning and running an electric vehicle is now far more attractive than it was before all of this happened.
But I mean, just on that, Baroness Altmann, you mentioned that. I mean, on electric cars, they've just cut the grants to buy them. That's the wrong direction, excuse the pun, of travel.
Well, it depends, because the advantages of the electric car are now much clearer. They help the planet. They are also much cheaper to run. And that's where the government thinks to itself, well, actually, we shouldn't now be subsidising these,
it's Rishi Sunak.
These vehicles. Yeah, stop talking about all of this. We're doing a wonderful job, the government. No, seriously, though, it is really hard for.
Yeah, you're right. I mean, but, in terms of practical help, you're saying public transport, electric cars. Well, as I'm saying, public transport, there's a huge strike taking place next week. Not entirely the government's position to do too much about it, but it could certainly twist some arms some more, couldn't it?
It's certainly trying, and it's actually very disappointing that the opposition hasn't condemned these strikes. Next week, I think, for the RMT union to come out as it has, interrupt the young children's exams and people getting to work. This is, with the current fuel cost crisis, we need to be able to rely on public transport more. OK, more questions coming up. Another breather for you. You're watching Sky News Tonight. Coming up, more questions, including when will the cost of living crisis end, and also how long's a piece of string? Welcome back. We're answering your questions about the cost of living crisis with our esteemed panel of experts lined up behind me there, as you can see. Let's start then with our next question from Philip. Interest rates on savings are not rising in line with borrowing rates. Why is that? Vicky Pryce, that's about banks and their margins, isn't it?
It is, I'm afraid, and that's been happening all along. So if you look at any period in the past when we've had interest rates go up, what you find is that what banks are prepared to pay lags hugely behind what the bank rate is. And when they start going down, it's the opposite. I'm afraid it's a little bit like the petrol prices we were discussing before, because in reality, when interest rates are quite low, banks don't make enough margins. Just therefore profits tend to suffer. So they try and make for it when they start going up, and that's basically what tends to happen. So the margin widens in terms of the difference between what the base rate of the central bank is, the one that's setting short-term rates, and what you get on your savings. So I'm afraid we're probably going to have to suffer from that for a while, but they have been creeping up, those savings rates, but I'm afraid they're still ridiculously low. So I talked earlier about how interest rates are negative in real terms. Well, if you look at savings rates, well, they're mega negative. Our
hearts bleed for those banks and their tiny margins. We'll have a whip round for them, shall we? Another one relating to banks and their ability to lend, I suppose, from Justin. So many people wondering this. It's all about getting your timing right. Is now a good time to buy a property, or will the housing market collapse? Crystal ball time, Baroness Altmann. Yeah, it's tough making that call, isn't it, right now?
Well, it's very tough, but also you have to say that house prices have rocketed. The cost of buying a home has become extraordinarily expensive relative to average salaries. And perhaps the housing market is due a bit of a breather and a pause. And usually, if interest rates are starting to rise, then you wouldn't expect the housing market to continue to soar ahead. But that might help some of the younger people getting onto the housing ladder. And of course, as interest rates stay far lower than inflation, if people have got big debts elsewhere, then the real value of their debts erodes. So, you know, there are swings and roundabouts to some of this, and some people won't mind if house prices cool a little bit. You don't want to crash or a sharp fall, but it might help people start to get more onto the housing ladder. But then you've still got the affordability issue because the cost of their mortgages will still be rising.
Question from students. We haven't mentioned a sizable section of the population yet. So here, let's rectify that. Kate asks, what help is there for students? They don't qualify for benefits, but are facing higher prices. Of course they are. This will only push poorer people out of education and further inequality, if I can say it. Anna, what help is there for students, if any?
Kate's quite right that students really have been missed out of a lot of these support packages. The maintenance loan increase is way below inflation, so they are going to feel their finances much, much tighter over the coming year. Most students don't qualify for benefits, though there are some exceptions, and it is going to be quite hard. Some charities do offer grants to people who are studying and are struggling for money. Turn to Us website offers a free search facility where you can look for charities that help people like you. Your university might well have a hardship scheme, and depending on exactly how your rent's set up, it is possible that some students might get that £400 off their energy bills, but quite a lot of students, if they're renting from, say, a big student housing provider, or if they have a rent deal with the bills rolled into the rent amount, might well not actually see that £400. So they are really being missed out at the moment.
OK, last question, I'm afraid, from Leo, which is, do we have a prediction of when the cost of living crisis will be solved, and if so, when? Vicky Pryce, it's about a minute each. I want to ask Ros for her view on that. When?
Well, I think...
Yeah, you start, Vicky. I think you got there slightly earlier.
Oh, right. So it was a competition. Sorry about this. I didn't mean to do that. But it's an incredibly good question, and the most difficult one of them all. And I think if the government knew that, then they would act in a certain way to make sure that it finishes quite quickly. I'm afraid it's going to be with us for some time because the war in Ukraine seems to be continuing. So it's going to be a prolonged conflict, I'm afraid, and the food crisis that we've got right now is likely to get worse before it gets better, because if you can't import the fertilizers that you need, for example, it's not just the shortages at present, but also whether you're able to plant things for the following year, or whether it's at all economically viable for you to use the very expensive fertilizers to ensure that you got enough for the next season. So if we find that the farmers don't, in fact, plant or get the plots ready for next year, then the food crisis might continue for a lot longer than we would have imagined.
Baroness Altmann, do you go along with that? I mean, certainly a tough 2022 ahead.
Yes. I mean, a lot of the big price rises due to the war in Ukraine, particularly relevant to food, probably haven't fully come through yet, and there's more to come on energy bills for households. But I would be very surprised if this lasts more than 1 or maximum 2 years. the government will have to cool things down, but you don't want this to be cooled down by a crash in the economy. You want it to be cooled down by an unwinding of the factors, the global factors, the pandemic after effects and Ukraine war that have actually driven much of this. And let's hope that the Bank of England's judgment that interest rates don't need to rise enormously to conquer inflation, and that it will subside within, let's say, the next 24 months, which I would expect, it proves right.
Finally balanced, as has our panel been. Thank you all very, very much indeed. Baroness Altmann, Vicky Pryce, Anna Stevenson, answered as much as you can in this hour of television on economics, all the way from the macro to the micro. Thank you once again, and see you again soon, very hopefully.